All right, today we're going to talk about 5 lies heavy equipment financing companies tell you. Because equipment financing can be pretty gangster. It's all too common to be lied to on the internet or when you're talking to a company on the phone about the rates, terms, and other things about actually financing heavy equipment. And we hear all too often from customers who have gone to another company and been told one thing and they put a deposit, whether it's a down payment or a first and a last payment, and then the terms get changed on them and they find out later if they don't take the rotten terms, they're gonna lose that money. So today I wanna go over 5 of the most common lies you may hear and some things you can do to avoid them. Lie number 1, heavy equipment financing rates from 5%. So, yeah, sometimes 5% happens, but almost never. I mean, if you could just go to your bank or go to your dealer, you could get a rate that if you calculated it in a calculator was 5%, maybe, but in reality, number 1, these contracts are never quoted, at least not on paper, which is what you really need to look at, never quoted as an interest rate. They're quoted as a payment. And I want to give you a little color as to how ridiculous these claims actually are, whether it's 3% or you see 3.99 or 5% or some other just total crap number. Recently, I did an equipment financing transaction for myself. We moved to a new office and wanted to buy a lot of new furniture, and it was a lot of money. It was about $100,000. And so I wanted to prove there was a reason for my company actually to exist. So I went to my own bank, and for a little bit of detail, credit score over 800, been in business many years, had enough money in the bank that I could have written a check for that equipment. I just didn't want to, and guess what? The bank said no. In fact, banks rarely lend to small businesses unless it's a small business with 100 or 200 employees, which I don't know about you, I don't consider that a small business. So we went and we got an approval from one of the lenders we use for our own customers, and it was a reasonable approval, but I guarantee you, if I put that number into a calculator, it was not going to be anywhere near 3 or 4 or 5%. It was a real number, and what most of the time you'll actually pay when you finance equipment for a small business. So just be careful doing business with any company that starts out with showing you a number that you, they, and I know is bogus. Lie number 2, finance or lease $100,000 worth of heavy equipment for 4 years for $2,300 a month, or any permutation of that. And what I mean is, this is basically the same lie we talked about when we talked about rates from 5%, but you'll see a lot of bogus payments on there. Now there's a range. Unless that range is really large, that company is not shooting you straight. And again, whether it's 2,300, and go if you go into their calculator, whether you put 2,300 or 2,400, that assumes lots of time in business. It assumes pristine personal and business credit, and most of the time, your real payment is not going to be anywhere near that. So unless there's a range, and that range, let's say it's 2,300 is where it starts at, the top should be over $3,000. Because what happens if you have a 600 credit score? What happens if you've only been in business 18 months? Because a lot of times these ads also say good for bad credit, but they don't tell you what the payment's going to be for bad credit, and you want to be careful. Don't work with a company that starts out with a lie. Lie number 3. Let's talk about a bait and switch, because this is something customers run into a lot. And what happens is companies will tell you that you own the equipment at the end, but you have to be careful because that's not always the case. And make sure what you have in writing is exactly the same as what you were told. Because I can't tell you how many times folks have called us and have been caught in a heavy equipment financing contract thinking when they make their last payment, that's it. And in fact, there's what's called a residual, and that residual can either be what's called a 10% put, meaning if you had financed $50,000 and you want to keep the equipment at the end, which of Of course you do. Some sneaky lenders can put into the contract what's known as a residual. And in nerd terms, we call it a 10% put. But what that means, let's say you financed $50,000 worth of equipment, and hidden in your contract is at the end, you have to pay 10%. So if it was a $50,000 machine, if you wanted to keep that equipment, which of course you do, you'd have to come up with $5,000, which really sucks if you thought you owned it at the end. And other times they'll sneak in what's called a fair market value residual, which means whatever that equipment's worth. And let me tell you, at the end of a term, let's say a bulldozer or an excavator is going to be worth at least half of what you paid for it a few years ago. So you want to be really, really careful. Number one, check out the reviews of that company all over the internet. Look, Google complaints and reviews and all that other thing, because if this company does that practice, someone is bitching about it on the internet. And secondly, make sure you read that contract. Lie number 4, evergreen clauses. And these are something to really be careful of. What an evergreen clause says is at the end of your lease, between 90 and 120 days of when that lease is up, you have to notify, or finance, you have to notify that company via certified mail of your intent to keep the equipment. And sometimes it's buried in like page 6 in a little teeny tiny font, and you have no idea about it. And so again, let's say it's a 4-year contract, and at the end you think you own the equipment, but if you didn't send them that certified letter, that lease rolls over, and it rolls over for 12 months, and you have to keep making those payments. And sometimes we see companies that maybe they have several leases and it's hard to keep track of, and they don't even know this. I had a guy once tell me he didn't realize he kept paying on a piece of equipment for 4 years after that contract was up. So be very, very careful, and again, always read your contracts. Here's another one that we come across. Leasing is always better than renting, and that's not always true. Even though renting can be a higher payment per month, there are some rental companies out there that have fabulous RPO contracts. And RPO stands for rental with a purchase option. And we see this a lot of times on heavy equipment that's in the hundreds of thousands of dollars. There are some great rental yards out there that structure these rental agreements so heavily in your favor, you'd be crazy to finance and take ownership of that equipment before the term was up. And the reason for that is oftentimes the 100% of your payment buys down the equity in the equipment. So for example, if your payment on something is $2,000 a month and the purchase price of it is $100,000, after you make your first payment, the future purchase price of that equipment is $98,000. And that equates to an interest-free loan. So if you're in a contract that good, even though, we'd benefit from helping you take that out and doing a finance agreement on it, we'll usually tell you, wait the 6 or 9 or 12 or however many months is left on that agreement, because you can't do anything better than an interest-free loan. If you need help leasing or financing heavy equipment, there's a link below. You can click that link or visit us at www.smarterfinanceusa.com.